Good morning, traders. Today we want to discuss a practical third Elliott wave forecast. Practical third Elliott wave forecast. I'm on a monthly chart of the Euro GBP, the Euro British Pound, and we counted the first wave here. So this is the first Elliott wave that I'm going to color it in light green. No, I'll change that to running out of ocean now. Red. Okay, that's the first Elliott wave from here, from this point to this point. First Elliott wave. This is the second Elliott wave. All right. Second Elliott wave also in red here. Now we want to forecast the end of the third Elliott wave. So as the third Elliott wave is underway, how do we know how far the third Elliott wave will go up, all right, in an uptrend? So there are many ways that trader can forecast the end of the third Elliott wave. And there are already videos at the 24 Elliott Wave YouTube channel where I show traders how to forecast the third Elliott wave, all right? So now I'm going to show you something else that I have now done so far. We're going to use what we call the Elliott wave channels, all right, to forecast the end of this third Elliott wave that is underway. Okay, we want to know where is it likely to stop. Now you want to understand that when we use the word forecast, we are talking about expectation, all right? It's not an exact science. The price may do something completely different depending on the economy news, all right? Economy news can change the dynamics of the wave count, all right? Depending on the market sentiment, all right? And also depending on the correlation between, the Euro GBP and other currency pair. Though I'm using a currency pair here, what we are discussing is valid for stocks, and also for any other financial instrument. So do not think that it's for forex traders alone, all right? It's for all traders, okay? So the first rule using the Elliott wave channel in order to forecast the end of the third Elliott wave, this is one will connect the low of the first wave and the low of the second wave. So here it is. We see this is the low of the first wave. This is the low of the second wave. So we connect those 2 points and we draw a line. So this is the blue line on my chart. Okay, and then we select the high of the first wave and we draw a line that is parallel to the first line that we have drawn. So this is the second line that we draw through the high of the first wave that is parallel to the first line that we drawn here. So in order to save time, I already placed them on my chart. So this is the first line that I've drawn, connecting the low of the first wave and the low of the second wave. After that, I choose the high of the first wave and I draw a line that is parallel to the first line, all right? So what we do, in order to forecast where the third Elliott wave is likely to end, trader will also, you see here, so we see the direction of the first wave. You see the direction of the first wave. That is represented by the red line, all right? Then we draw a line from the beginning of the second wave that is parallel to the first wave. Don't get confused. So this is the line that is representing the first wave, okay? So then now we will draw another line from the low of the second wave that is parallel to the first wave. So this is the first wave here. So we are drawing a line that is starting from the low of the second wave that is parallel, to the first wave. Here it is. So this line here, this green line, is parallel to the red line. And we want to see the intersection of this line, with our channel. So this is, here it is, you see here. So because this line is it parallel, it looks like it, all right? I don't want to move my line, I want to, is it parallel? Let's check it carefully. It must go to the low of the, it looks like parallel, yes or no? Yes, it looks like parallel, okay? So we draw that line that is going through that is, we draw that line from the low of the second wave, and we make sure that it's parallel, okay, to the first wave. And the intersection of this line that is parallel to the first wave, all right, I want it to be here. Why is it changing now, moving, man? Yeah, all right. Stay put, please. Stay put. Okay, we want it to be parallel. All right, you get a message. So we want this line to be parallel to this one, and we will, as we draw it, the intersection between this line and the top of our channel will indicate the possible end of a normal third Elliott wave. Are you with me? So first thing, we join the low of the first wave and the low of the second wave. We draw the first line, and then we select the high of the first wave, and we draw a line that is parallel to the first line. The next thing that we do, we draw a line through the first wave, so it's a straight line, boom, like this. Now we draw another line from the low of the second wave that is parallel to the first wave, and the point where that line is touching the top of the channel, that is okay, the minimum target for the end of the third Elliott wave. A normal third Elliott wave is likely to end here, right here, all right, where this line is touching the top of the channel. You can see, that's why you can see the tail of this candle here. Professionals know that some of them are expecting a normal third Elliott wave, but we know that the third Elliott wave is not very often normal. What do I mean? If we say that the third Elliott wave is not normal, it means that it's usually extended. All right, it's usually extended. So the meaning. So if you are buying, you are trading the third Elliott wave, we catch it here. This will be your minimum bullish target. All right. But because generally and very often the third Elliott wave will be extended, it will break above that channel, all right? But a normal third Elliott wave, will stop here, all right? But because the third Elliott wave in most cases are extended, we will now, what we do, because this is our minimum target right here, all right? We are swing traders, or you are day trading, you hit that level, you know that there will be a kind of resistance here, all right? But now, because the third Elliott wave can be extended, what we will do, we'll now use market geometry. We measure the width of the first channel that we have drawn. You see, remember how we draw it? We measure the width of that channel. Oops, that's the width of that channel, all right? And now we project it above the first channel. And as we project it like that, we have this point here. So you project the width of that channel. Now you have this point here, and you will draw another line through that point, this point here, which is representing the top of the projection of the width of that channel. This is the width of this channel. We project it up. Then we put a point there, and we draw a line that is parallel to our first channel. So as the third Elliott wave is being extended, because this is exceeding our minimum target, we will now expect it to go up to the top of this new channel, which is the projection of the first channel. So in this scenario, looking at the Euro GBP on a monthly chart, professional traders are watching this target level here, all right, in the zone of 9500 as a possible target for the end of the third Elliott wave. Does it mean that the price will definitely go there? No. It's expected that the price may go there. Doesn't mean that definitely you go there. There is a midpoint target that the professionals are also watching. They will also draw the median line of the projected channel. Here it is. This is the median line of that projected channel. You see here? That's why people are taking profit. You see the shadow on top of this you see of this candle is because we are at the midpoint target as we project the first channel up. Professionals are taking some profit here. All right, this is how we can forecast the end of the third Elliott wave. Now that he exceeded the minimum target at the top of the first channel, we measure the width of the original channel, we project it up, and we also are watching the median line of that channel. And our ultimate, bullish target for this bullish third area wave will be somewhere here on the edge of the top of the second channel at 9500. This is about practical third area wave forecast. Now, as always, when we are talking about a wave forecast, don't assume that this is exactly what's going to take place. We want to know where are the resistance level, and we don't want to violate the market pattern. We don't want to use the area wave on its own and forget everything else. The basic market principle, we don't want to forget them. Otherwise, we will be going round. Okay? So there are resistance here. You see here, we'll remember what we said before. The normal resistance are very important. So there's a resistance. You see this level that we are talking about, 9500. There's a resistance there. But before that, there's another resistance at 9265. And now there's a resistance, let's zoom into it, at 9141. Or a price going up, price looking for better, resistance level. This is a basic market principle. Price going up, price looking for a better resistance level. But the economy news and the fundamental can change the dynamics of this discussion today. You see, it's a technical analysis. But tomorrow, for instance, my friend, there is a very bad news for the Eurozone. You will see a bearish candle down, and you'll be saying, what's all this is about the third area wave? No, it's about combining the area wave analysis with the reality of the market, talking about the economy news and the fundamental. All right, it will be nice to have a market where the fundamental may not influence at all the technical analysis. That would be great, isn't it? All right, that would be very, very good. But the point I'm making here, always remember that the economy news and the fundamental can change the dynamics of the market. All right, so here this is about a practical third area wave forecast. Professional will connect the low of the first wave and the low of the second wave. They draw the first line, then they choose the high of the first wave, and they draw another line that is parallel to the first line, and then they draw a line through the first wave, and from the beginning of this, from the end of the second wave, they draw another line that is parallel to the first wave. All right, an intersection between that line and the top of the first channel will be the minimum target for the third area wave. But because the third area wave is very often extended, if the third area wave breaks above that channel, we will measure the width of the original channel and project it to the upside. But as I'm saying to you now, our target is now at 9500, midpoint target near the median line. But if it breaks above this channel here, what do we need to do? If it breaks above the second channel, we measure again, we project that width again to the upside, and we draw again a line that is parallel to our first channel. Here it is. We will do it like this. Here it is, and then we have another third channel. If it breaks above this one, that will be a third area wave that is very, very extended. All right. I will be recording another video. I need to warn traders. There is in the coming weeks, I'll be recording another video. This will be more theory-based videos when I will be showing traders how to use the area wave channels to forecast the end of the fourth wave, how to use the area wave channel to forecast the end of the fifth wave, so you also may understand what is the area wave channels. All right, this is the end of this tutorial. As always, if you have any question or suggestion, put in the comment section, and in due course I will be recording another video to answer your specific question. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. We are the TSTWSYS008 traders talking about practical third area wave forecast. Happy trading to you all, and speak to you soon.